Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Okay, guys, I've got a ton of information on the markets, the economy, black swans, XRP, Archer Aviation, so kick back and soak it all in. Let's start with Bloomberg's comments from Friday night. A flurry of data affirming U.S. economic resilience has driven stocks to their best week this year, with dip buyers stepping in after a recent rout. Equities rose on Friday, with the S&P 500 extending a 7-day rally to 6.8%, the best performance in such a span since October of 2022. The stock market halted a streak of 4 weeks of losses that had been partially driven by concerns the Fed Reserve wouldn't reduce borrowing costs fast enough to keep from overshooting the economic runway. But new data this week put frightened investors to shame, showing ebbing inflation and a resilient consumer, hallmarks of the central bank's goal of a soft landing. Okay, so let's check the inflation numbers for ourselves. Now, as consumers that actually go to the grocery stores and the gas station, we all know this is bullshit, but let's play along anyway. Upper left-hand corner, change in core CPI year over year. All right, heading in the right direction. To the right, core CPI, 3-month annual rate, sharp decline, very good. Lower left-hand corner, change in core goods prices year over year, turn negative, very good. Here's the hair in the Vaseline. Change in shelter costs month over month. That chart's not looking so hot. Now, what do you suppose will happen to shelter costs if rates go down? Better start thinking about it. There could be a spike in housing prices as buyers return to catch falling interest rates. That might be good news for my son, little Frankie, who's a realtor and sells fancy $2 million condos on Lakeshore Drive, or my partner in the mortgage business, Rob Wicklander. But back to Bloomberg. Economic bellwether Walmart's latest earnings report also showed a more discerning consumer. Americans are also pulling back on travel while deferring big home renovations. And the housing market, specifically rents, remains a thorn in the Fed's side as it tries to bring inflation back to its 2% target. But by and large, the landscape is looking pretty good for Fed Chair Jay Powell, only 2 weeks after a modest rise in unemployment triggered a Wall Street mini panic. New data this week suggested, as many said from the start, was a significant overreaction. My subscribers may recall I called it a market temper tantrum. We want a rate cut, we priced in a rate cut, we need a rate cut, but we're not getting a rate cut until September, and we're not happy about it. Now, this is the narrative Wall Street is pushing for this week's market and the upcoming Democrat convention. Pay attention, a few weeks ago, Wall Street was panicking. Now, the U.S. looks to be in soft landing territory, with inflation falling below a crucial threshold as the country nears the end of its battle back from the pandemic's economic aftermath. While the U.S. economy is cooling by design, consumers are still spending and more upbeat, further cementing the unmatched status of America's resilience following the 2020 recession. After close to 2 years of historically low unemployment and more recently rising wages, the Fed Reserve's often criticized caution continues to bear fruit as the central bank is poised to start lowering interest rates. But the process is still a balancing act. With pandemic savings largely gone and wage growth cooling, many Americans are increasingly resorting to credit cards and other loans, raising questions about the sustainability of consumer spending, especially as more people are falling behind on payments. Yeah, we're going to talk more about that later when we get to the Black Swan Watch section. Now, pay attention, guys. We need to sort all this out before the bell on Monday. What's leading the charge back? Well, from Yahoo Finance's morning brief, tech. Tech stocks are back in the driver's seat. The S&P 500 is now in the green for August, having climbed nearly 7% out of its most recent hole. In the bigger picture of 2024, that's put stocks just 2% off all-time highs reached only a month ago. There's no doubt that economic data has driven the recent volatility, stress, and relief, and specifically labor market data, which has taken the economic spotlight from inflation. But as our markets reporter Josh Schaefer wrote this week, this economic back and forth has resulted in, of all things, tech stocks getting their groove back. As has been the case over the past few years, tech stocks, and especially the Magnificent Seven, led the S&P 500 up, then down, and back up again. So the big question for many of us is, are we going to get a big rotation from bonds and big cap dividend stocks into small caps where we hope to make our fortunes, or is big tech going to get it all? Stay tuned. Get out your calendars, guys. Monday, August 19, 10 a.m. Eastern Time, we'll see U.S. leading economic indicators. But Monday also marks the beginning of the 4-day Democrat National Convention in my hometown, Chicago, where Kamala is going to accept the nomination. Hey, at least you lefties got to choose the candidate you wanted, right? Democracy at work. Anyway, I don't know if you know your history, but Chicago's been home to some really event-filled conventions, so don't think we can't get a swan out of a meeting like this. The Dems will be celebrating all their favorite issues: killing unborn babies, higher taxes, hundreds of billions in support for Ukraine and every other nation, wars in every corner of the world, biological males trashing the ladies in women's sports, drag queens reading books to children in grammar school, hating on white male Christians and Jews, supporting Hamas in Palestine, and of course, welcoming millions of illegal aliens, which we will add to our social programs, schools, and hospitals. It should be a fun-filled 4 days. I've got a lot for you to plan for. Wednesday, August 21st, 2 p.m., we'll see the minutes of the Fed's July FOMC meeting. Thursday, 8:30 a.m., initial jobless claims. 9:45 a.m., S&P Flash, U.S. Services and Manufacturing PMI. Friday, August 23rd, 10 a.m., Fed Chair Jay Powell will speak at the Jackson Hole Retreat. I would only add 3 other Fed members are speaking on Monday and Tuesday. But here's the big one, guys. Friday, August 30th, 8:30 a.m. Eastern, personal income and spending, and the entire PCE data group, the Fed's favorite. I absolutely love that they are dropping this on options expiration Friday, on the last trading day of August. This has the potential to be an atomic day in the markets. Pretty quiet for earnings this coming week, but I would watch Lowe's on Tuesday, retailers TJ Maxx and Target, and analog devices or ADI on Wednesday, and I'll be watching TD earnings on Thursday. Now for the big upcoming stuff you need on your calendar. I don't know how some of you trade, especially options traders, without using an events calendar. Isn't knowing which events could spark volatility important to you? The U.S. markets will be closed on Monday, September 2nd for Labor Day. It's not confirmed, but GameStop could drop earnings around September 4th, and maybe Ryan Cohen will finally tell us what he plans to do with that $4 billion he's sitting on. September 12th, the Usher concert drops at AMC. We are only 32 days to the second day of the September 17th and 18th Fed meeting, where we currently expect to get our first rate cut. That same week, Friday, September 20th, is the third quadruple witching date of the year. Friday, December 20th will be the last one. September 30th marks the end of the third quarter, a vital date for AMC fans. While it hasn't been announced, I currently forecast AMC's third quarter 2024 earnings to be released around November 7th, and I also believe it'll be better than last year's Q3, which was the best in our entire 100-plus year history. The third quarter will include Twisters, Deadpool, Wolverine, Usher, and Beetlejuice. Let's see if Adam Aaron can destroy this third quarter like he did the last time. We are only 80 days to the November 5th election, which will be immediately followed by the November 6th and 7th Fed meeting. December 17th and 18th will be the last FOMC meeting of the year. We are 156 days from inaugurating a new president January 20th, which means if Trump is elected, Gary Gensler is scheduled to be fired the following day. Uncle Frank is as giddy as a schoolgirl. But guess what, guys? It looks like someone may be planning some new virus bullshit for us just before the U.S. election. The first cases of monkeypox are reported as China starts Mpox screening in stunning replay of COVID outbreak during the last U.S. presidential election. And then from Bloomberg this weekend, an outbreak of a new strain of Mpox that's become a global health emergency is especially daunting to track and contain because the virus is mutating. The surge of cases is centered in the Democratic Republic of Congo, with 15,000 people infected and 500 having died. While Mpox vaccines are available, few have made their way to Africa, the only continent where the disease is endemic. At about $100 per dose, Africa will need about $4 billion to fight Mpox. Well, we should just print that money and send it right over. All right, so you guys already know I'm tracking potential white or black swan events for my subscribers. Let's start under the heading geopolitical. There's Russia-Ukraine, China-Taiwan. I just added monkeypox. There's Israel versus Hamas and Hezbollah. Question is Iran or Turkey going to jump into the mix? North Korea is always a wild card, and Uncle Frank considers the 2024 election itself a potential swan event. Now, under systemic and financial, we've got the U.S. credit card debt crisis. Also, the commercial real estate crisis. Unrealized losses at U.S. banks and the Fed Reserve. We see 282 U.S. banks at risk. There's the de-dollarization trend with BRICS and the $35 trillion U.S. debt spiral. Ryan Cohen could surprise us with an announcement about the future of GameStop, or maybe another Roaring Kitty post. But something tells me that kid ain't saying shit anymore. Possible appeals could surface in the SEC versus Ripple case. We could also see approval of RLUSD or XRP ETFs. There is always the threat of the derivative tsunami. Elon Musk could debut his new peer-to-peer payment platform on X, formerly known as Twitter. That could affect XRP, XLM, even Dogecoin. We could get a surprise rate cut from the Fed, or they could be delayed by some inflationary news. There's always the hidden hedge fund over leverage, securities sold yet not purchased, potentially billions of unreconciled synthetic shares out there, and then the China-Japan banking crises. If you guys want me to add anything to the list, please put it in the comments. On the geopolitical swan side, Ukraine is pushing deeper into Russian territory, the first invasion there since World War II, and is forcing Vladimir Putin to contend with the embarrassment and logistics of some 120,000 residents fleeing their homes in the Kursk region. Ukraine has been planning an operation that would shock the leadership in Moscow, and Ukrainian President Zelensky is warning of next important key steps amid a flood of troops and clouds of attack drones. The lightning intervention shows a war stuck in a prolonged stalemate that can still produce surprises, even if Ukraine's allies are reserving judgment on whether it will produce a turning point. The author states, it may be a move that ultimately is more about the negotiating table than the battlefield, and in that sense, it is a smart play indeed. Well, the jury is out on that. We'll see how smart this move was real soon. But then from Newsweek, Gaza ceasefire deal imminent. A U.S. official said on Friday that mediators are preparing to implement a Gaza ceasefire and hostage swap deal that would end fighting in the region. For 2 days, mediators from Qatar, Egypt, and America conducted talks in Qatar's capital city of Doha in an effort to put an end to the 10-month Israel-Hamas war. I wanted to share this piece from Friday with you from Markets Insider. Companies around the world are flashing a distress signal not seen since 2009. Global firms are showing signs of distress as high rates ramp up their debt burdens. What they're talking about here, guys, are these large revolving debt facilities, lines of credit. They're adjustable, so when the rates go up, the payments go up with them, and that can erode your earnings, right? But distressed exchanges, a form of debt restructuring, accounted for the highest share of defaults since 2009, according to S&P Global. Global corporate defaults totaled 87 at the end of July, with 52 occurring in the United States. Firms worldwide are showing signs that they're struggling to deal with high debt loads, with one particular type of restructuring accounting for the most defaults since 2009. The number of distressed exchanges, a form of debt restructuring that takes place outside of bankruptcy court, accounted for 2/3 of all global defaults in July and over half of all global defaults recorded so far this year. That's the highest proportion of distressed exchanges as a proportion of total defaults since the great financial crisis. Now, this may seem familiar to AMC shareholders. When Adam Aron swaps stock at near record low prices for debt, that is considered defaulting on the original debt terms or a distressed exchange by rating agencies. Now, this slide goes out to Al from Boston, who's been trying to predict when we're going to get a real serious correction. Foreign investors pulled a record amount of money from China last quarter, almost 15 billion, arguably reflecting deep pessimism about the world's second largest economy. Should the decline continue for the rest of the year, it would be the first annual net outflow since at least 1990, when comparable data begins. In the world of distressed debt, so-called creditor-on-creditor violence, where lenders scrap over how much money they can get back from ailing companies, has never been as rampant. You see, sometimes the U.S. bond and stock market is the only game in town. That plus the Mag 7 is often enough to keep markets from dropping when they should. Remember, when you're the only girl at the dance, you're the prettiest girl at the dance by default, even if you a little ugly. Okay, enough about all that shit. It's time to talk about trading. This is not financial advice. I am not a financial advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. But the two biggest opportunities I see for myself right now are Archer Aviation and Ripple's XRP. This one goes out to my mentor, Barry Friedman, down in Florida. On your screen is the daily chart for Archer. This is the most promising growth stock I've seen in a long time. This company has only a $1.37 billion market cap, but sports an order book of $6 billion, with $360 million in cash and $47.5 million in debt. So yes, they're going to need to raise money eventually, and I don't see that being a problem. 52-week high, 7.49. 52-week low is only 3. It closed at 384 on Friday, up 11 cents or 2.95%. It gained 5.5% for the week, but is down 24.26% for the month, thanks to some persistent short sellers, which I will cover in a minute. It's down 35.89% for the year, which I think makes it a scorching buy in light of the avalanche of headlines it's received recently and its impressive strategic alliances. It's below its 50 and 200-day moving averages of 3.98 and 4.69 respectively, and it would appear a scorching buy signal is developing on the MACD. When we go to Yahoo's most shorted stock screener and set the filters, region, US, price, intraday, greater than $1, average 3-month volume, greater than 200,000, exchange is set for the New York. I see 1,643 results, and Archer is ranked the 28th most shorted stock on the New York Stock Exchange. This one is getting popular with the short sellers. You want to short it? Be my guest. According to the New York short interest, 61,110,000 shares. Short interest ratio is elevated, 7.42 days to cover. Short interest as a percentage of float stands at 27.47% according to Capital IQ. But what's most shocking, off exchange short volume ratio 73.35%, which indicates to me some dark pool abuse. From July 31st of 2023 to July 31st of 2024, sorry guys, best I can do, I can see the short position against the stock travel from 16 million shares to a new high of 61.1 million. At the time of this recording, I see 300,000 shares available with a cost to borrow fee of 24.08%. On Friday, the CTB did get as high as 27.46%. Archer Aviation is very popular with institutions. I've got 353 institutional owners, 341 long only, 2 short only, 10 long short. Institutional shares held 155,649,000. Divide that by shares outstanding of 319,446,000. I've got 48.72%. As of Friday, Max Payne stands at $4 a share for that August 23rd expiration. Based on a last price of $384, expect support to the downside at levels 373, 363, and 356. Expect resistance at points 390, 397, and 407. Now, guys, there are dozens of amazing articles out there on Archer for you to review. They have deals with United, Southwest, but most significant, in my opinion, is the support from their contract manufacturer, Stellantis. Jeep maker Stellantis is investing even more cash into air taxis. Archer Aviation will receive up to $370 million in funding from the automaker. When your own manufacturer steps up and votes with its checkbook, that shows the confidence they have in the project. From just yesterday, the U.S. Air Force has received its first Midnight electric vertical takeoff and landing aircraft from Archer Aviation as a part of a contract signed in 2023. The delivery followed the Pentagon's airworthiness assessment of the system before the corresponding flight test under the Air Force's innovation arm, AF Works. After the recent handover in Salinas, California, the Midnight was deployed for another set of trials which involved intelligence, surveillance, and reconnaissance flights, medical evacuation, and cargo simulations. Quote, "This delivery represents a pivotal moment, not only for Archer, but for the future of military aviation," said the Archer Aviation CEO. The U.S. Air Force's latest eVTOL is the first of 6 provided under the $142 million agreement with Archer Aviation. The California-based company accepted the contract in support of AF Works' Agility Prime program to research and employ eVTOLs and unmanned aerial systems for different use cases across the U.S. military. I would like to put all predatory short hedge funds on notice. Ignore this article at your own peril. Air taxi company Archer Aviation is selling 116 of its Midnight electric flying vehicles to Future Flight Global in a deal valued at up to $580 million. The deal brings the total estimated sales of Archer electric vehicles to $6 billion, according to the company. As a part of the deal signed under a memorandum of understanding, Future Flight Global agreed to a $5 million pre-delivery deposit. Listen, viewers, I personally hate electric cars. I'm Italian, which means I appreciate the sound of a good exhaust note. But this is something completely different. Within 36 months, I expect to see these things flying everywhere in multiple big cities across the nation. There are already plans in place for LA, New York, Chicago, and the San Francisco Bay Area. For once, me and the environmentalists are on the same side. What got me really excited was this map depicting an Archer flight from San Jose to San Francisco in only 10 minutes, as opposed to driving 1 hour and 15 minutes. Or you could fly from Oakland to Napa Valley in 12 minutes instead of driving an hour and 20 minutes, all for a cost not much more than an Uber. These contraptions can fly with or without a pilot, are nearly silent, land or take off from almost anywhere, and are deemed far safer than any helicopter ever manufactured. There's still a lot of work to be done, chargers to be built, and Archer is building a 350,000 square foot manufacturing plant adjacent to the Covington Municipal Airport down in Georgia. But I am really excited about getting involved in this stock at the ground floor. I've never seen the stock trend on Reddit even once, but something tells me that's all about to change. Subscribers to this channel know that XRP is not only my favorite crypto project, but is also my largest position. But it's time for honesty and clarity. I am as excited as you are about the recent headlines surrounding the coin, where analysts speculate about how high the coin might go. Instead, I'd rather focus on the catalysts ahead because I have no inside information to share. I don't know if the SEC or even Ripple will appeal Judge Torres's decision. What I do know is the coin has been deemed not a security by the judge, making it the sole coin with recent regulatory clarity. I also know Ripple is testing a new stablecoin that will benefit XRP. I know Ripple is planning its initial public offering, which will benefit XRP. I know there are XRP ETFs coming in the near future, and I personally believe they will be larger than both Bitcoin's and Ethereum's ETFs. I know there are 100 billion XRP with 56.11 billion circulating, which sounds like a lot. But I also know XRP is the best mousetrap in the world when it comes to cross-border payments, and SWIFT transfers 5 trillion a day. That 100 billion float may be absorbed quickly if Ripple captures even a small percentage of that business. I believe there will be a mass adoption phase for the project by banks and central banks all over the world. So I'm going to bide my time and build my bag, because I believe that people from Bitcoin, Ethereum, and even Solana camps that hate XRP are going to suddenly buy it when it starts to break out, and for good reason. They all know it's a better project in every measurable way. They've all had their big runs. The next one belongs to XRP. Speaking only for myself, I've never seen a better trade setup in my life, and I'm confident XRP can produce life-changing results. Not investment advice or advisor. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.